Hello everyone and welcome to the Market Map Daily by Investing Angles. Today we are going to cover our usual agenda, major US indices, what they built today, what kind of candles they formed, and also we will have a look at the Elliott Waves for Nasdaq and S&P 500. After that, we will discuss the major sectors of S&P 500 and also some major big stocks like Microsoft, NVDA, and the other. After that, we will check what's happening with TLT, and also we will have a look at some commodities. We'll see what commodities like silver, gold, oil, and gas are doing from the perspective of candles. And in the end, as a cherry on the tart, I will offer you a quick update on Apple from the candlestick and Elliott Wave perspective. Alright, before we get started, please check the subscribe button and ensure you are subscribed. Let's move on. So this is the volatility. The first chart is volatility. So what we are seeing here is that tomorrow will be extremely important day, and extremely important because we had a bearish move yesterday, strong bearish move that fell below the 200 days moving average, and today's little candle, we cannot say it's fully bullish, but it's also not a very bearish because it moved above the 200 days moving average, which is the red line, and there is a chance that it becomes a bigger move tomorrow. And another thing, tomorrow is the weekly closure, and the weekly frame looks like this. You see, if the candle closes like this or goes a little lower, we will have a nice bearish engulfing, and it means that volatility is set for declining for at least 1 week or even more. But if we have the volatility bounced higher, and depending on the level, there is less chances for bears down the road, and well, it's quite a opposite situation for the market. All right, so that's the perspective for volatility. Let's keep this in mind. So tomorrow is a battle. So how dollar index is doing. Yesterday we said that it closed with a bullish formation, and today the index formed another bullish candle within the range of the previous one. So technically it's ripe for a reversal right now, and it wouldn't be surprising at all if dollar closes tomorrow with a solid green candle. And the final chart here is the US government bond yield for 10 years. So far it is moving down, and the chances for a weekly bearish closure here are substantial. However, any bounce here would be bullish, and technically if this engulfing transforms into a dark cloud cover, it will be a bullish sign down the road. All right, so and today I also discussed the perspectives for this in our previous video into TLT and bond market, so you can check and review to see what are the reasoning behind this idea that I'm not viewing this as a very bearish formation at this moment. All right, so let's move on to the next one, and this is our daily closure today of major index ETFs. What we are seeing here is that SPY formed a dark cloud cover, which is technically bearish. Nasdaq formed also a dark cloud cover, so it failed to complete the bearish engulfing just by a few points, and technically not even points, basis points. And Dow Jones is also kind of neutral, so it wasn't able to close below yesterday's open to form a strong bearish formation, and it is right now neutral. So technically, any move tomorrow would set a direction. And somewhat similar situation for Russell. I think that everything is very well balanced right now, and any negative news or market decline tomorrow could switch the path, and the market could go down. So this is a perspective, and if we look at the 2-day frame, today technically it's closed with a bullish formation. However, it's not very convincing. And similar for Nasdaq, it formed a very tiny doji, so it's a neutral one, and it is sitting right at the resistance or support level, and we will know only tomorrow what is going to happen with this. But if we look from bigger perspective, this doji is bearish compared to the red candle before. And for Dow Jones, 2-day frame is also a doji, and it could be anything. It could be a reversal, a bearish reversal, or it could be a bullish continuation, depending on tomorrow's closure. Everything points out that tomorrow will be an extremely important day. Okay, so let's move on and see what is happening right now with futures. Futures closed the day with technically bullish continuation candle, all of them, and if there is no strong sell-off tomorrow, then we might see a recovery, and the prices will go higher. So this is the perspective from the futures. Okay, so let's moving on. This is the futures for S&P 500. Do our chart. So practically it remains the same as we outlined yesterday. Nothing happened. As we expected, the wave moved down, and I would say the wave is corrective. There is no impulsive structure at this moment. The question is how far this wave would go. So we outlined this level 5918.50 as a critical, so it must not be crossed, otherwise the impulsive structure will be broken, and we would be looking for a red path to continue. All right, so that's then moving to the next one. This is the same wave at the micro level for SPY. What we are seeing here is a potential ABC formation complete, and the index might be ready to go down. If it breaks through 585, it's for sure moving to the lower lows. Why I was talking about the bearish formation first, because the very first wave here, which is marked wave A, it is a corrective wave, and so technically it makes the whole wave A parenthesis corrective, and this is not a good start for an impulse to go higher, but we'll see. Tomorrow will be extremely important, and we will have a look at later on in Nasdaq. So let's okay. So whilst we are here, let's have a look at Nasdaq as well. So it's the futures for Nasdaq right now, and you see this is called walking on thin ice. So we just couple of points away from breaking the impulsive structure. If the futures move down here and cross this line, which is 21,146.75, it will be a broken impulse, and we would say that most likely the index will see lower lows, if not tomorrow, but in the coming days, because the index still might have a bigger path here. I mean, for the flag, something like this. For example, if it crosses, moves here, and then it will move down. And I'm talking about this cross. So it would need to go below this line, and then potentially it can go higher and make a make a bigger flag. All right, so that's for Nasdaq. Nasdaq bigger perspective is here. Technically remains the same. We discussed it. We discussed it at the micro level. So the potential for 1, 2, 3, 4, 5. If it's broken, then we will expect Nasdaq to move to lower lows somewhere in this rectangle, or might be even lower. Nasdaq usually makes very strong moves down for wave 3, which we would expect here. Okay, next is the sectors. That's the very interesting map here. So let me give some explanations. First of all, this is the one I would like to talk about, the technology sector. And it's the only one which has a strong bearish formation. It's a bearish engulfing, and it broke below multiple support levels and is approaching the 100 days moving average, which will be huge if it crosses here. The other ones, like financial, industrial, staples, utilities, energy, and consumer discretionary. Consumer discretionary is questionable, so it's more bearish than bullish. However, nevertheless, and even healthcare, so it's with green candle. The only concern here, so healthcare is a bit concerning because of this formation. So you can see the 3 candles formed within the range of the green one, and this could be a very bullish, very bearish formation if it is confirmed downward. And we also know that this formation for the healthcare sector is bearish, and we are tracking a flag here, which will end sooner or later. We will don't know when exactly. So it may extend, but it won't be impulsive at this point. The other thing, that the consumer discretionary could also be bearish. But in general, the only strong bearish one is technology. And this would be a fine battle tomorrow between technology and the rest of the world. Technically, what we are seeing is technology is about 28-30% of the overall US market cap, and the remainder is bullish. We'll see how the battle goes. So this might be aligned with my with the Pareto principle, one of my favorites. So what it means that 80% of trouble comes from 20% of population. So this would be it, because technology is 28-30% together. We'll see. That would be an interesting day for sure. And speaking about technology themselves, this is the chart of the biggest stocks. So Microsoft is bearish, and down below, back below 200 days moving average, red line. Amazon is clearly bearish, like a full engulfing of the candle here. Apple is bearish and lost 100-day moving average support today. Tesla formed a Harami candle, which is technically bearish, but it needs a confirmation. If it is confirmed, well, it's not gonna look nice. Netflix is a dark cloud cover, and it backtested today 50 days moving average blue line, making sure it will go down. The same for Google. Google is bearish inside down, and well, needs a confirmation, not very strong. NVDA is bearish engulfing by a hair, by just a few basis points. Nevertheless, a very strong formation. Get ready for the next move down. And Meta is also formed a bearish Harami cross, which is viewed as potentially strong bearish formation if it is confirmed tomorrow. So technically 8 out of 8 are bearish, and these 8 are over 30% of market cap. So let's see how it works tomorrow. Okay, so that was it for the U.S. indices and what is happening under the hood. Now let's move on to TLT. So what TLT is telling us? Candles are bullish. Yesterday we mentioned that it was a strong move, and most likely it will set up a new direction for TLT, and this is what is happening. So the daily is definitely bullish, and also the 2-day frame closed today and also pushed above the major support. So technically it is bullish, although it's not confirmed yet as a reversal on the 2-day frame. And the 3-day frame is looking good, but it will close only on Monday. The weekly tomorrow is aligned for a nice bullish candle. If it moves a little higher, it will be bullish engulfing, and it would almost guarantee a couple of, or at least a week of higher prices there. And I tried to chart this potential here, and what we are seeing is possibly an impulse up, possibly 1, 2, 3, wave 3, wave 4, and 5, if it doesn't cross this level 85.84. If it does, well, it's going to be a corrective structure for sure, and it's going to be A, B, potentially C here, and then a move higher, a move lower. So another important day for TLT tomorrow. We need to make sure that it is forming an impulse. However, I'm not quite sure about the very first wave of the bottom, because it has both corrective and impulsive qualities, and we would only know about it once we have a structure of a higher degree. Alright, so that's been about TLT, and if you're interested, by the way, in TLT and other reports, so then you can go on our website, investingangles.com, and check on treasuries, for example, and if you click US 10Y, it will bring you all information about our weekly reports, annual reviews, and weekly analysis, and so on and so forth, including videos. The same for what we support: currencies, commodities. Let's say if you're interested in gold, you just go here and click on gold, and you will get all information that mention gold and our reports, including videos. So that's and if you are interested only in assessing our service, we are offering a free reader subscription right now. It's totally free. You just need your email, and you will get all our reports, and including those that are free of charge and open to generic public. All right, so let's move on, and another tab that I wanted to show today is the quick overview of commodities. So what we are seeing here, oil is possibly formed a bearish dark cloud cover, and in the report that I will post later tonight, I will discuss it, and also the levels for to watch and see what are the next steps and moves. Natural gas is doing absolutely fine, following our call long ago, and well, we already posted the report about natural gas. Speaking about gold and silver, they are in a very interesting position right now. If we look at the smaller frames, for example, like a 4-hour frame for silver, we can see that it is a bearish engulfing here, and we need to assess this to see whether it's going to be a huge impact or not on the metal. If time permits, we'll post another video today talking about either silver or gold. Speaking about energy fuels, for those who follow uranium, this is something I wanted to show. This is the three black crows on the weekly frame. This is the weekly frame. If this candle tomorrow closes like this or goes lower, then you should get prepared for the prices below $4 for this particular instrument. And an interesting thing for those who follow GDX miners ETF, this is a very nice bearish engulfing here, and this is, I would say, the way to celebrate a bearish death cross of 50 over 200 days moving average here. So the chances for a move lower for the miners are very, very high. And in the end, as I promised, a little sketch about Apple. So Apple is falling hard, and this is a big trouble. Considering that the stock is about 9% of Nasdaq and also included into other major indices, that would be a huge impact on them. What we are seeing here is today Apple lost the 100 days moving average, and the chances for a move lower are fairly significant. On the weekly frame, if it closes with the candle like this tomorrow, give or take, that would be a 3 black crows on the weekly frame. This is gonna be serious, and these three black crows are fairly classical. So one is overlapping, one is gapping. Another thing that happened today is the 10-day frame closure, and this is a strong tower top formation. Chances for the move lower are fairly high. It could happen immediately, or we could see a couple of weeks of consolidation here before the next move down. So the chances for this for the stock to move lower after this combination is fairly high. I would say 80+%. And this is the monthly formation. Well, it's still early to discuss about it, but something to keep in mind. This is potential inside down or bearish engulfing Apple candle on the monthly frame. If it happens in January, that will set up at least a February of red prices, red candles. Let's move on to the chart. So this is the perspective chart. What I think that Apple made a fairly nice impulse here, and it can be done like this, or this way, or let's say it could be even lower, which is I marked as an alternative 1 or wave A. And if this is the first one is complete, and then we had a fairly short wave 2, then Apple is set for another wave down, and this is our targets somewhere between 180 and 200. This is the red rectangle. That would be something. And if however Apple takes a more moderate path and decides to go through A, B, C, well, then we might see something like this. At this point, Apple didn't show any reversal pattern, so we are expecting it to move down. Once we see something, we'll adjust. And the final chart is Apple as a longer perspective. This is quite an interesting chart, and I took it from the lows in January 20. December 2020 and January 2023, and I think that it formed a fairly nice impulse here. It could be 1, 2, 3, or it could be this one, 1, 2, 3, 4 here. And the interesting thing that the last wave is not an impulsive wave at all. Could be a motive, so it's technically could be a diagonal, ending diagonal. So this, it looks like the only reasonable formation here that was able to find, and yeah, so it could go higher and making even a bigger diagonal, but I think that considering the stocks formations and the candles, we are expecting this to move here. And speaking about ending diagonals, so we know that their prices are tending to return to their origin, which is 164. And if we check with our previous chart, so this is pretty much aligned, this analysis from with another one. That's the perspective for Apple, and we'll see how it is going to impact. Yesterday we discussed Microsoft. It's not it's also sneezing. So now we have Microsoft and Apple. Both of them are not bullish. Let's say this. Okay, so that's been all. We discussed impulses, we discussed TLT, we discussed indices, we discussed TLT. Had a look at some commodities and Apple. So if you like it, just say so. If you have any suggestions, we are open. Comment below the video and let us know. Don't forget to subscribe for our channel, that you are always at the forefront of the news and what is to expect from the markets. And if you're interested in deeper analysis and more technical charts and more views, subscribe to our website. We have a free reader subscription right now for analyzing free articles. Thank you very much for watching, and happy trading, everyone.